what I laid out to do. Over the last week, a number of you have sent me emails asking questions about foreign currency translation. Not a lot of difficulty, and also few questions on segment reporting. So what I intend to do today is to look at specific examples and then talk you through those examples. So hopefully that will bring you more understanding of those two topics in lesson 8. And then next Friday, I will give you an overview of Unit 4, which is basically corporate governance and the future of IFRS. It's a really short unit, which is the reason why you have only a week to do. The lecture notes and other materials for Unit 4 will be available from Monday next week. So you need to study that lesson up until Friday. It's basically a really short unit. And as I said, if there is demand for us to have a revision session, then the following week, so next week, Friday, is Unit 4 review and questions, if you have any questions. So we could arrange an exam guidance and a revision session for the week after that. Depends. So I will communicate with Trang, and the two of us will see how best we can organize that. Obviously, depending on whether or not you guys want a revision session. Okay, that said, as I will usually do, I will take you through some of the statistics that I have from Moodle up until this morning. And I will say it's actually still worrying because not many of you are engaging with the material on Moodle. And I find that really interesting because if you don't engage with the material, if you don't go through the information that we provide for you on Moodle, how else are you going to be able to understand the nature of the course, but most importantly, the nature of the questions that you are expected to answer? And in some way, that lack of engagement is beginning to show through previous exercises that you have done, both the coursework, but most importantly, the in-course exam, which is basically an MCQ. For all the years that I've taught this particular course, we haven't had any MCQ before. And so this year is the first. So really, that should give you an opportunity to pass the course first time. So I hope you will engage a bit more with the material. But so far, what we have for the whole of this week, from the beginning of Unit 3, when I took over, only about 9%, okay, and the unit finishes today. Relatively good review of lesson, only 15% of you have seen of you, 27% have viewed the Moodle book. Really good, about 30%, again, really I review to have looked at those. Fine. Okay. Right. Okay. Right. So just about 30% of you have viewed the class example. The Moodle quiz is even worse. And of course, there hasn't been. The good thing, though, about the final point there is some of you are sending me emails and asking questions, which is really great. So if you have a question and you don't want to post that on the Moodle forum, then send me an email, a direct email, and I can respond to that as well. So today's session is really in response to some of the questions that I've received so far. So in relation to segment reporting, what I have tried to do is to actually give you a really clear example as to apply the principles of segment reporting, how you could apply some of those principles that you have learned from the lesson notes as well as the prescribed textbook, but also the standard itself, onto concrete cases, onto actual data of Marks and Spencer. So for those of you who don't know, Marks and Spencer is a British brand and it's been around for over 100 years. It's a big company. It has international branches as well, subsidiaries and so on. And so Marks and Spencer produced its 2020 financial statement. And what I have basically done is to go into the financial statement and extract this segment data. So remember that IFRS 8 requires companies to operate in different geographical regions as well as different lines of business or different classes of customers to produce a segment information that will provide more useful data to users of financial statements. So this is the information we have. The clothing range from the UK, that's the revenue, and that's the profit. The food range, that's the revenue, and that's the profit. And then you have international revenue, so revenue from all other international outposts, subsidiaries, or branches, and then the profit of that. So you have the total for the group. So what does this information mean then for us to be able to apply the principles of IFRS 8? Okay. How do we apply those provisions to that segment information? Remember, we have the segment information here. It's pretty clear and actually quite straightforward. So we then now need to go back to the standard and think about what segment reporting is all about. What does IFRS 8 tell us? You know, what are operating segments? How do we define operating segments under the standard? And which types of segments are we looking at? Well, we know from the standard that we could have segments based on different lines of business. So in the case of Marks and Spencer, we can see the company has clothing range, the company has food range, the company has international range, the company even has a bank, an M&S bank. And so we could have different lines of business as a segment. We could have different geographical areas as different segments, and we could have different customer classes as segments. So we then need to look at this IFRS 8 information or provisions, as they call them, and see how we can apply them to the data, to the actual quantitative data that we have from M&S. Okay. We also know from the standard, from IFRS 8, again, in your lecture notes, but also your prescribed textbook. Most importantly, the standards that we have covered so far is important that you have a copy. They are all free, or you can look at a summary of those standards online. IAS Plus, for example, that is produced by Deloitte, one of the big four, gives summary for every standard. Every international reporting standard. Okay, so we know from IFRS 8 that for us to determine any segment as reportable, it has to meet at least one of these quantitative criteria. The combined revenue, it has to meet at least 10% of the combined revenue, both internal and external. So for us to say the clothing range of M&S is a reportable segment, there has to be at least 10% of the revenue or more. Okay. Also, for us to say that the clothing range is a reportable segment, if it does not meet the revenue criteria, it could meet the profit criteria. So it could be 10% of the combined profit of the company, or 10% of the combined assets if we have data in relation to assets. So you can see that the criteria is that the segment should meet at least one. So it shouldn't meet all of them, it should meet at least one of them. Also, we know from the standard that if we were to decide on the reportable segments, all of the reportable segments combined together should report at least 75% of the total external revenue. So in other words, if we say the clothing range is a reportable segment, and how do we determine that? And then we say the food range is a reportable segment, and so on. Those two, if there are only two, those two should at least report up to 75% of the total revenue of the company. So this is the criteria. Now you can see by explaining all of this, if this was an exam situation or you are asked to write, let's say, an essay or a report on how you can apply IFRS 8 provisions to, say, the M&S data, or everything I've explained so far should be part of your assessment, should be part of your evaluation. Okay, so you first and foremost give an information of what IFRS 8 is all about, what are the provisions, and then you apply those provisions onto the concrete case. Okay, so next we want to do is to determine reportable segments based on the criteria that we have in the standard by looking at the information from the M&S financial statements. And then we try to explain why some of the segments qualify as reportable and why others may not qualify as reportable. And finally, you want to discuss some disclosure requirements. So at the end of today, I will also upload these slides on Moodle. So how does the M&S segment then look like? The information we have about revenue and profit, we could use that to determine the percentages in relation to each of these. So this is the total revenue. The revenue of the UK clothing range as a percentage of the total is about 32%. Okay. And for the UK food is about 59%. So if we are only looking at the revenue, then we could say these two qualify as reportable segments. Why? Because the standard says to be regarded as a reportable segment, an operation should produce at least 10% of the total revenue. However, we can also see that if you look at the profit side, so under revenue, international does not qualify, M&S Bank does not qualify. But when you look at the profit, so remember that the criteria says either 10% of the revenue or 10% of the profit or 10% of the total assets. Or indeed, a reportable segment could, satisfy all of these criteria. It doesn't matter. What matters is to be classified as reportable segment, it needs to satisfy at least one of the criteria. So when we look at the profit, we can then see that the international range, so the first and the second one qualify. The international range is actually 19%, which means it's above the 10%, and which also means it does qualify as a reportable segment. But the M&S Bank doesn't, because the profit as a percentage of the total profit is only 3%. Okay, so basically what I've done is I've taken the segment data from the M&S financial statements, and I've used this information to calculate the percentages, and then use those percentages to determine the reportable segments. So in this particular case, then I will say that the UK clothing range is a reportable segment, and so therefore M&S is right to produce segment data for these. The UK food range is a reportable segment because it's about 59% of the total revenue and 40% of the total profit. So therefore, it does qualify as a reportable segment. The international range is, although it is, so I have a question here. So someone is asking why the revenue is zero from M&S Bank. The revenue is zero because the bank does not buy and sell. The bank doesn't have like buying or producing particular inventory and selling them. What they have is finance revenue or finance costs. So as a bank, they do not sell like a physical product in relation to like clothing or food or the international branch. So it's a financial services sector. Okay. So that's the reason why. But you can see that they have a profit. So in other words, they sell financial services, not sell actually. They give out financial products like credit cards, like store cards, and things like that. So it's not like selling a product, it's like providing a service. And so the interest that they get from those services is what we regard as profit. Okay. So the bank can range, now this actually constitutes a number of other sectors, but if you look at the M&S Bank, you will see bank financial statements, you will see these. So it's only 3%. So I would say again that the international line of business qualifies as a reportable segment because it is 19%, it produces 19% of the overall profit. So when you look at the segment reporting data of the M&S accounts, you should see clothing range as a reportable segment, UK food range as a reportable segment, and international range as a reportable segment. This information is useful to investors, it is useful to financial analysts, it is useful to potential investors to see where really M&S is making much of its money. You could actually see from here that in terms of revenue, they are generating way too much from food. So if you are the manager, and you can also see that that leads to about 40% of profit overall. So if you are the CEO of Marks and Spencer, you should probably be sitting back and thinking, maybe we need to expand our food range because food is actually producing in many ways twice as much revenue compared to clothing and 6 times more revenue compared to our international branch. Okay, but you could also see that the clothing range does have high profit. So although it's only 32% of the total revenue, it's actually up to 38% of the total profit. So again, as a CEO, I will sit back and say, yeah, we need to be expanding our clothing range because, you know, the UK public like our clothing range and so on. And we make a lot of profit as a result. So this information is important. And users of financial statements also will look at the company information and say, yeah, there is scope for them to expand the food business. So I want to invest in this company or otherwise. Okay. So those are the kinds of information that you'll be required to have an understanding of. The next set of questions that I received is in relation to foreign currency translation. And so what I've done for many of you, actually only 2 people fully looked at the small group example. So I wonder how you actually contribute in the tutorial sessions that you have. But only 2 students looked at those material, and you need to be looking at those questions as well as the solutions. And of course, if you don't understand them, then you can get in touch with me or with Tran or with both of us, and we should be able to help. So what I've basically done with this particular section, and I know we need to have some time for questioning, if you have any questions. In the meantime, don't wait for me to finish. If you have a question, please post that on the chat forum, and I'll try as much as I can to respond. But what we see here then is a question, the small group activity question 1, which I posted on Moodle for you to do this week. So today's Friday, you would have already finished those tutorial sessions for this week. Next week, material, there isn't any multiple choice question because it's all discussive. So corporate governance is all theoretical. and the feature of IFRS is also all theoretical. So it's just a short section that you need to look at the notes and then one or two essay questions for you to answer. Okay, so this is a question from your small group exercise, which I wanted to very briefly go through. So we have Highlands PLC, a British-based company, which reports in a pound. This company established a company in Switzerland, Swazi Limited, in 2006. And the company invested 3 million into that company. On that date, the company in Switzerland borrowed 2 million locally, so that is in Swiss currency, and acquired a factory for 5 million and a machinery for 2 million. So this information is all in the Swiss currency, as you can see. Okay, but the draft financial statements, the draft statement of financial position, so this is the UK company, and this is the overseas company reporting in the Swiss franc, in this Swiss currency. So the factory they bought is 500, the machinery they bought is 2,000, and so on. Okay, so here we have this Highland company invested 750 pounds, 750,000 pounds in pounds. Okay, but in the Swiss currency, we've been told the investment was about 3 million. Okay, but what is important here is Swazi is reporting that, Highland PLC, which is the parent company, is reporting that as 750. So all other information is plain and simple. The difference here is we have financial statement in the pound and the other financial statement in another currency. So what does IAS 21 tell us? Well, we need to translate that using the temporal method first and foremost from the Swiss currency to the functional currency, and then from the functional currency to the presentation currency, which is the secondary translation or the net investment method. So a question like this is always going to require you to understand the translation mechanics, but also to produce the statement of financial position under the temporal method as well as under the net investment or closing rate method. Okay, so that's the question. Well, what do we know? We know from your lecture notes or from your textbook that for you to undertake a temporal translation or the primary translation, when you look at monetary items like cash, receivables, payables, loans outstanding, etc., all of these should be translated at closing rate in the statement of financial position. Non-monetary items like inventory, plant, property, plant, and equipment, including the depreciation of those plant, property, plant, and equipment, should be translated at historical rate. Now, all of this information is in your model book. Exchange gains from any as a result of the exchange rates should be taken to the income statement. Now, in this case, we're not preparing the income statement. It would have been relatively much more complex and probably more interesting if we had the income statement. But we will only be looking at the statement of financial position. The secondary translation, which is the net investment method. So the primary translation is the temporal from local currency to functional currency. The secondary translation, net investment from functional currency to presentation currency. What is the criteria? Well, we translate all assets and all liabilities at closing rate. So this is closing rate method. We're using closing rate for almost everything apart from share capital, which is always translated at the rate that existed at the time of issue, normally the historic rate. Reserves, which is retained earnings, for example, or general reserve or revaluation reserve, all reserves should be translated at the rate that existed at the time when the reserves were earned or when the reserves were initially recognized. Again, profit and loss should be calculated at the time when they were generated. Depreciation under net investment method is often translated at average rate. Okay, again, under temporal method, depreciation is calculated at the historic rate. Under net investment method, depreciation is calculated at the average rate. So we then apply this information to the question. What then do we need to do? This is the temporal method. This is really very straightforward if you understand the translation mechanics. One slight difficulty is the profit for the year, and I'll explain that in a minute, because this is where I got most of the questions from. So Highland PLC is already in pounds. So you are translating from the Swiss currency to the pound under temporal method. The information we have is not extensive enough for us to be able to say, oh, well, the functional currency is different from the pound. What we do know is that Highland PLC invested in this subsidiary and they actually spent money. So there's every likelihood that the primary economic environment is the UK. Okay, so we translate all of these then using the historic rate. So what are the rates? Let me just go back to those rates so that you can see. So the historic rate, or the rate that existed at the beginning of the year, is 4.0 Swiss franc to the pound. At the end of the year, we have 3.0. The average rate is 3.5. Okay, so that's what we are using. So the historic rate for all of these, but then of course, when we come to current assets, we use average rate for inventory, trade receivables, closing rate, closing rate. Why is it average rate for inventories? This is one question that I received. So normally we're told in the, we're told here on the, where is it now? On the temporal method, that non-monetary items like inventory, plant, equipment, including depreciation, should be translated at historical rate. So why are we translating inventory at average rate? We are doing this because assume you are a multinational company, as in this case, and you buy inventory tens of thousands of times in a year. So from January to December, different companies are buying inventory like every 2-3 days. It's almost impossible for you to have on record the exchange rates that existed at every time you purchase inventory. And also, at the end of the year, the closing inventory, even though you have a scorecard that you keep track of your inventory, it is almost meaningless for you to calculate the particular inventory that is left as closing inventory, when that inventory was purchased, and what the exchange rate was at the time. So in order to simplify the process, we take the opening rate and the closing rate and look at the average, assuming that inventory was acquired evenly across the year. Okay, so that's the explanation for that. So we use average for that, but trade receivables and bank, these are monetary items, so they should be calculated at the closing rate. Long-term loan, under temporal method, opening rate. But of course, under closing rate method is the closing rate. So the slight difficulty that we had, the provisions tell us that share capital should always be at the opening rate or the historic rate. So these are the same in this particular context. Profit for the year. Why is profit for the year different? Profit for the year is different because under temporal method, we are told that depreciation plus the assets, all of them need to be translated at historic rate or the opening rate. So we need to do this calculation in order for us to be able to determine the translation of the depreciation. Okay, because remember that profit is calculated at average rate. Again, the company makes profit at every point in the year. So we don't know how many times the company bought and sold items and made a profit, but we can use the average rate to represent all the profits that were generated across the year up to the end of the year. So, but if we just translate all of the profits at average rate, then that profit takes into account of depreciation before we arrive at the profit. So this is the reason why we take the profit in the Swiss currency, add back the total depreciation in the Swiss currency. So we have the total profit before depreciation. And then we have that total profit before depreciation translated at average rate. And we have depreciation translated at the historical rate or the opening rate, which in this case is 4.0. And then deduct that from the total profit. So the actual profit for the year in pounds is 302. So that's what we present here, 302. So now, how did we get this 111? You can see that the current, the non-current and current asset side of the statement of financial position is all complete. But remember, the standard says if there is any difference in the exchange rate, that difference should be taken to the income statement. In other words, that difference should be used to adjust the profit. So the balance on our statement of financial position is 941 under the asset side. So we should adjust the profit or the reserve section of the statement of financial position to arrive at 941. Now, if you add this and this, is more than 941, so the balancing figure is minus 111. This shows that if we prepared a profit and loss account, there will be a loss on exchange rate recognized in the profit and loss account as 111, which will then reduce our profit, and that then will give us the balance of 941. So all of this then added to the Highlands PLC, that's what gives us the group. Okay, so the key thing is to understand how you translate this into the pound, and then you add this to the pound, to the Highland PLC, and get the group figures. Okay, so I hope this is now very clear. With the closing rate method, you can see that everything is actually very straightforward here. There isn't any extra working notes. Everything is at closing rate, apart from the profit for the year. Again, the profit for the year generated evenly across the year, and share capital is at the historic rate, always. Okay, because remember that the share capital doesn't change, okay, except if new shares were issued during the year. In this case, nothing like that. So again, you can see that the difference here is a profit. So there is a gain on translation. This is the total. So you first need to complete your asset side and you get the total, and then your capital and liability side. And once you complete those two, you will then find the difference that will need to take you to that figure. If it's a positive difference, then it's a gain. If it's a negative difference, then it's a loss. So in this case, we have the totals of that. Again, you add it to the parent company and you have the group. Okay, so that's basically it. So what then you need to do for next week? Have a look at the lesson 9 and 10, really short lessons. Please do read them. They're also important. If you have any questions, there will be a forum on there. Post your questions. And of course, as I said earlier, there isn't any MCQ for lesson for Unit 4, but I will try and post at least 1 or 2 practice questions, essay questions that you could use to practice if need be. So next Friday, I will give you an overview of this unit. The following Friday, we will try to organize a revision and to give you some guidance about the exam. Okay, so next Friday, you don't want to miss it. And most importantly, the following Friday, which is the last Friday, 2 weeks today, the final Friday that you will get to see us live, is for us to discuss some exam guidance. And if you have any questions, then you can ask. Okay, so that's it. Let me stop talking, stop sharing, and open up for questions. Any questions? The date for the exam has not been released yet, but it's often in May, June, or April, May, June, in between those. So once the dates are out, that will be published on Moodle as well. And of course, the professional services will send you emails to let you know of the date of the exams. Okay. Hopefully, by the time we discuss 2 weeks from now, we will have an idea as to when the exam will be. And if we know, we will also discuss that in our exam guidance session. You're welcome. Well, the exam will be timed, but you are given a 24-hour window. So remember that this is not an in-person exam. So you don't need to come to Glasgow University to take the exam. So it's an online exam. And so therefore you will have a 24-hour window to complete the exam. We will discuss about the timing again during the exam guidance session, which is why I said earlier, you really do not want to miss that particular session, because we are going to be looking at broad discussions in relation to the exam. Okay. So you will have 24 hours to complete the exam, but if it is timed, then within those 24 hours, you will have something like 4 hours to complete. So in other words, once you start the exam, you could have 4 hours to complete it or 2 hours to complete it. We don't know exactly how the timing is going to look like, but what we do know is that you will have a period of 24 hours for you to complete the exam and submit it. Okay. Anyone else? Okay, there doesn't seem to be any more questions, in which case it was great to see you all. We can call it a day. But please, if you have further questions, do not hesitate to send me an email and ask those questions, or send us a Moodle post, and we will try as much as we can to respond to your questions. Okay, if there is no more question, then let's call it a day. Have a great weekend. Please have a look at the lecture notes and let us know if you are finding any difficulty. Take care. You're welcome.